Hello and welcome to episode 10 of Mortgage Mythbusters.
Episode 10.
Episode 10, still no jingle.
Well, mate, there's been a bit of ground covered on that jingle.
Alright, well we'll see. Again, I say
Still no jingle at the minute, but it's closer.
Yeah, so when would the jingle kick in? Do we kick in like at the
The thing is,
start?
you won't know. For all you know, they're already there.
And I'm just
I've already
like
done
an
it.
idiot.
Yeah, exactly. That's what I'm trying to...
Well,
trying to do.
I don't know if we did this last week or if we had a week off, but let's call it last week's podcast, which was the myth that we were busting was that mortgages are complicated. Probably out of all the myth busting we've done, I'd say it's probably the weakest bust of a myth because mortgages are complicated. It's what we do that makes them less complicated.
But not complicated for us, if I'm a customer.
Yeah, that was the idea.
The way you made it sound, though, the way like you watered it down to being at my level, I could go out and do it.
Yeah.
Basically. Well, I couldn't, but the way you'd made it out to be, well, you come to us, you do this, blah, 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 and then you get your mortgage.
Is that why you applied for that apprentice job the other week?
I wouldn't be. I'd be going for head job.
Head job.
Yeah.
Straight in.
Yeah, straight in.
Without the qualification.
I qualifications. No, so it was good for me to see all the stuff that you do, but how easy it is as well for the end user, for the customer to come in and just not have to worry about any of the gubbins that you have to do. It's like anything, isn't it? If you go to someone who's, as you always say, you always hark back to having a builder in your house. If you get a builder around to tell you how to do something, you couldn't do it, but if he came around and did it,
It's like doing things yourself. Like I'm a big believer in, even in PGS, like me doing an application, like the physical logging on and completing the application would take us 3 to 4 times as long, would be twice as inaccurate as it would be if I had my power planner doing it.
Yeah.
And I'd be better off doing other things. So like I'd use an advisor, like to do my own mortgage. Sometimes because you've got to, so not every lender would, but you just want that like kind of stress taken away. Plus you're also emotionally involved, aren't you? So if we can take that away, especially during like that first ever mortgage you're going to have, I think that's just key, and that's where it's like less complicated. It's meant to be complicated because it's
not to the customer.
Yeah, exactly.
So what that leads me on to the question of what do you actually do then when you haven't got if you had all your power planners here, what would you do then?
You're speaking to people and like I'm on appointments at the moment, and I think we're doing about eight a day, twice a week. And actually, like I've enjoyed it. I was speaking to.
Is that per advisor?
Per advisor, yeah.
Right.
And then probably you could double that because you have like kind of follow up confirmation chats as well. But initial new appointments, we aim to have around about 20 slots of like availability, and then sometimes that the inquiry is going to be a little bit detailed, so you need that extra space. Sometimes you've had 10 appointments at 10 mortgages instantly, so you kind of need to think, well, actually I need to do some work off the back of it because it doesn't just automatically.
And again, is that per advisor, 20 appointments a week?
I think roughly we are doing roughly round about, I'd say 30 when we've got like full staff and no holiday periods, no bank holidays. But normally that would be Chris and Charlotte doing 15 each, and at the moment we're kind of mixing that up a bit. But it's some appointments can take 10 minutes, some can take 2 hours. But the point is that when I'm doing it, that's when I really feel like I'm in the game. So I do a lot of work with my advisors where they'd come to me with like what they'd say is like problem cases, so like leaning on with mentorship and like, what do you think about this? The longer I'm out of that game and not doing the advice, the rustier I get, because the product's changed so much that you would lose touch.
It's like Faz said the other week, isn't it? You've got to keep your hand in it.
Absolutely.
To keep yourself fresh with it.
Yeah. And I do that with my CPD, but reading stuff that's put out there by the people who want to educate you versus a customer putting you on the spot and making you go and do your job and find out and work, and what we call is like kind of firefighting research. That's where you learn your trade, because it changes. There's not just a rule where one lender will stick like that all the time. They move so much that we have to ask that question between ourselves. We say,
Paddy's literally just kicked the bucket there.
That's my drum set. So we have this thing where we would ask, like today we'd say, right, who's most generous at the moment? Because that changes between lenders. So yeah, it's a good one. But in terms of the complication, that's our job. And I think I ended it by saying, if you finish the process and get the keys, and you think, blimey, that was hard, then we haven't done our job.
Yeah.
It's not just about getting you in the house, it's about you thinking that we're valuable in what we do.
Yeah.
So good. That moves us on to today's myth. And today's myth is quite fitting because of what's happening in the market at the moment. But you need a deposit to get a mortgage. So we're going to bust that one wide open. This is the type of myth that we would have to pull. So we'd have to pull this podcast technically when this new niche disappears, because obviously it's misleading, isn't it? At the moment, today, which is the 12th of May, then we're able to bust this myth. Shut up, Baz, I'm rusty today. He's rolling his eyes. We're going to do these visual one day. You can't do this. I get this a lot. But the most exciting thing about this is we get to bring a guest in today, and it's one of our other advisors, Charlotte.
Hi.
How you doing?
I'm very well, thank you.
Why are you smiling?
Yeah, why you look like a bouncer.
Why are you so excited?
Yeah, what's going on with you? It can't be work. Come on, what's happening? Charlotte's sporting a very shiny, massive ring on her finger.
Indeed.
So she's soon to be betrothed.
Been very happy for the last week.
Scott stepped up. She's back from Florence, and he's done the job.
Yes, he has indeed. 3 years together. Now we're engaged.
Very nice.
Fiancé to be.
So I thought it was a great time to get Charlotte on.
One, she's happy.
One, because she's we wanted her on the podcast anyway. We did put her in the spot. She came in today because we're gonna have, when we knock off, we're gonna have a little quick glass to celebrate. But the 100% mortgage thing, it's new, it's fresh, and Charlotte's, I believe, had the first inquiry last night.
I did indeed. I was super excited, wasn't I?
Yeah, honestly, like so excited, because we'll explain in this, and I'm going to go deep in it because I'm passionate about it, but I understand the risks. But for the right people, this is a game changer. Absolutely.
Yeah.
Well, first of all, I think you need to explain to me exactly what it means, because as ever, I'm the thick one of this. So,
well, Charlotte can, because she's already explained this to her fiancé Scott.
Right? Is he the first customer?
Was it in Florence? This was class. Last night she was telling me as she's doing this. And go on, I'll let you say.
So I got I believe it's Monday, wasn't it? They got released. That skipped in, and now the first lenders who have decided to announce their 100% mortgage. And I got it through on my phone, and I'm super excited about this because work as a mortgage advisor, so I like to keep on track of stuff even when I'm on holiday. And I was like, oh my god, Scott, 100% mortgage, this is amazing. This is going to be so good. And I was going through it and I was reading it off to him, and he sat there on the sun lounger, glass of Prosecco in hand, I must admit. Well, it's probably a couple by this point. And I was going through everything. And then last night I texted him and said, oh my god, I've just got my first 100% mortgage inquiry from a client. I'm super excited. And he put back and goes, oh, what does that mean? And I'm like...
That's like me after these podcasts. I get it all explained in detail and then just switch.
But that is how, honestly, Scott probably had the best kip on that sun lounger talking about mortgages.
You keep saying they're boring, but
they are. I mean, they absolutely are. But it's not an exciting conversation, is it? But to us, that's how sad we are, because we... imagine, what did we just say? 30 customers that we speak to a week.
Yeah.
And they're customers that have seen a property, want to buy it. And a lot of them we have to disappoint and say, look, not right now, you need to go away and do this, this and this. There's the small minority of them now, we're not going to go back over because they'll contact us. You can't force people to buy property. But they're going to now be able to. And that's why Charlotte was so excited yesterday. We'll let you lead. We'll educate you on
so 100% mortgage.
Yeah.
First of all, tell us what would another a 90% mortgage, 80% mortgage, is all different stages you can get at the minute.
So just imagine, if I said I want to buy a house, but I want to buy it and I want you to give me all the money. That's all the risk is on you, isn't it?
Yeah.
Yeah. So that's what a 100% mortgage is. If I said to you, I want to buy a house, but you give me half, and I'll put in half from my hard-earned cash, you'd give me that back with a lot less risk, because you'll get your money back because you put it in the house, haven't you? Bearing in mind, you're allowed to, if you want. If I don't give you that money back, you're allowed to take the house anyway.
So, right, okay, hold on. Right, so for that, without jumping ahead, you're saying that you'll get that back. I've gone 50-50 with you on it.
So you're the lender.
You're the bank.
You're the lender. I'm the customer.
Right, you've come to me and said, I want to buy 200 grand house. I've got 100 grand.
Yeah.
So that 100 grand is a deposit.
Yes.
Yeah.
Is that right?
Yeah. Yes.
So that comes to me. That comes to me. I add the other 100 and we'll buy the house, right?
Yeah.
Because we is the right word. You and the lender, me and you, the lender, buy the house together.
Yeah, in effect. But so at the minute we own 50-50. What happens if you can't pay, something happens to lose your job?
Yeah.
And then basically what happens? How do I never get my money back then? Then what? I know there's the whole thing about default, if you default or whatever and all that kind of stuff. So what happens then?
They repossess the property.
I get the property, right?
Yeah.
So what happens with? Have you just totally lost your 100 grand?
No. So
how does that?
So you know when we do the marketing with you and you print like the posters and stuff, and at the bottom we've always got to put that strap line on of your home may be repossessed. Do not give up repayments. So the repossession at the moment, and mainly because of what happened in COVID, it's a lot longer process than it used to be. It would be like 6 missed payments and boom, that's it. The lender would turn up and want to take the property back. They'd put it at auction, they'd sell it for whatever they could get, as long as they got the money back and you get the surplus. So you get a bit of your money back.
Also, you do get some, you would still get some.
But the effects of that's called repossession. You're pretty much not going to get a mortgage again for a long time. Yeah.
And do you have to prove that you can't pay them? Do you know what I mean? Like, so for that, to get that money back, would I have to prove to you that I'm skint and I need... Or could I literally have loads of money in the bank and just decide not to pay?
That's where things are good now. And it's not the consumer duty that's done it. It's just that... I think banks have a responsibility. So now it's a case of having a conversation. You've missed a payment, come and talk to us. Not knocking on doors and debt letters. It's come and talk to us. Yeah, so then they would look at you and go, hold on a second, you've still got your season ticket. You've still got it, you know what I mean? And they would work on a repayment plan.
Right, okay.
But at some point, in instances, there is times where they will...
It will go, it'd have to go down the line eventually, they would.
Yeah, absolutely.
Right, so that would be a 50% mortgage, in effect.
Let's say that you got your 50 back. Yeah. I haven't paid you for 6 months, so you've also charged us fees and obviously the rolled up interest, so it'll be 50% plus what I haven't paid back in interest. And then you sell it for, let's say, what do we say, 200 grand. So you sell it for 190 at a discount because you want your money back. But I'd just get less. So you'd get all of your...
So I would make... it would always swing in the favour of the lender to get their bit
my
back.
own personal deposit that I put in...
Is it risk, really?
Is it risk? Whereas if we go back to the 100% scenario, which is a good way for us to explain it, you let that compute.
Yeah, so that was in effect, that example was a 50% mortgage. So 100% mortgage is literally Charlotte coming to me and saying, I want 200 grand.
Yeah.
And me giving the full 200 grand.
Yeah.
But she can't pay it, right?
Yeah.
I don't have to give her anything back, but those 6 months repayments that you haven't paid, right? I'll talk to you. I don't dare look at you because you're just taking my money by the sound of it. so 6 months. I don't know, say £1,000 a month just to make it easy. So that's 6 grand you owe me on top of the 200 grand, right? You haven't paid. We then sell the house to get me my money back, but could only sell it for 190. So that's 16 grand I'm out of pocket then.
Yeah. That's the main problem with the 100% mortgages is the value decreasing. Well, you buy at 200, but then it goes down to 190, which is the problem with the valuation. Whereas compared to the 50-50, even if you sold it for 10 grand less, you've still got that equity in the house that you put in originally.
Room for manoeuvre.
Yeah, it's a lot higher risk.
By that? You've still got the equity as in...
Well, for a lender, that's where the risk is kind of mitigated because it's gone. So like at 50-50, you know you're going to get your money back because you'll sell that property.
Yeah.
But what about solicitors' fees of selling it and all that kind of stuff as well?
Obviously, if it's repossession, the lender would take that in. They would take that chunk out of your equity.
Yeah, so that would come out of him. Right.
But this is where it is. Like on the 100% mortgage, the risk is solely on the lender.
Yeah.
And there will be people who can't pay that mortgage at 100. But we've talked about this in other podcasts because the richest most sensible person in the world could lose the job and have ill health, and therefore not make it. So to me, as long as they're clever about doing this, then actually we shouldn't have that, right? In an ideal world, and we can say this because we can back it up in, well, anyone can, because there's only one product. It's very easy. So there's a few caveats. So how they can protect that, because can I borrow 200 grand, Barry? The house is 200. I've got no risk I've got nothing to risk. Can I do that? Yeah, here you go. You're going to, remember we did this with you set your own little lending rules. It was all about age, who's dead ages and stuff like that.
I wasn't dead ages at all. I just thought if you were like 80 coming from mortgage, you might not always be around to pay it back. That was all.
But it was good. Like no one went.
I think that was a bit that we wanted to cut out. I think.
But there was the Bang of Baz, and no one wanted to go to the Bang of Baz because he wouldn't lend any money. His criteria.
More than happy. His criteria. It's fine.
I think it was like 20% loan.
There's criteria in place for the 100% mortgage, though, isn't there?
Right. So
you can't just go and buy a 200. You know, it depends on the way we pretty much work backwards. It's based on the rental income payments that you currently pay, and you've got to be in rented accommodation for 12 months to be able to do it.
So you can't do it if you already own a house, or
first
or
time
if
buyer.
you're a first time buyer, you can't do it.
At the moment, no. First time.
Oh, that's good. No, sorry, first time buyer.
First time buyer, yes.
Sorry, yeah.
But you could rent. People could have had a property in the past.
Yeah.
What if I'm straight out of school? Well, not straight out of college.
But just to touch on that, because you could be in rented and have owned property in the past. You could actually be in rented and have buy-to-lets. You know, I've been in that situation when I left the military. I had buy-to-let, and then I lived in rented. So them 12 months, you wouldn't be allowed to because you've already owned a property. So this is to help people get on the ladder for the first time as a first-time buyer.
Yeah.
Right.
And it's got to be the mortgage payment that we go for is the rental payment that you are currently paying. So we can evidence that you've paid that payment, that rent payment.
So I'm paying £1,000 a month.
Yeah.
Then your payment plan would be no less than £1,000 a month.
No more than
no more
than £1,000 a month. Sorry.
Yeah. So £1,000 or less.
In the 12 months, what they're not just looking for the paid rent for 12 months. They don't want to see you missing your gas bill and things like that. They're not looking for you to be finishing the month with 500 quid in your bank, because no one would do that. You've still got to live, you know.
Yeah.
So they're not massively stringent
as long as you're not breaching it. Yeah, you know, you can have a credit card, you can have a loan.
So what happens? What happens if 30? I've never moved out, never rented.
Yeah.
Live with my parents still.
Yeah.
Want to buy a house?
Not possible.
Not possible.
Why not?
Because you haven't.
Because I haven't got that.
Even if you're renting,
even if I've got like, I mean, obviously, if you had a pot of money in the bank, then you would probably use that as a deposit. But even if I'm very well off and I'm just thinking I'm going to keep that money in there, kind of thing, there's no way you wouldn't look at my financial history and say you can do it. It's got to be, you've got to have a rental history.
So
you've got to be able to prove that you're responsible and you can pay rent, your bills, you know, you can keep a track of everything. Over the last 12 months is minimum, isn't it? So anyway,
right.
But obviously if you've got a longer period, then that helps as well. But you can't be living with your parents paying £100 a week, and then they're not going to take that, because it's completely different living with your parents and paying them money to you managing your own bills, and that's what the lenders are now taking into consideration, because there's so many people, isn't there, that, you know, you see on Facebook and that all the time. We're like, well, I'm paying rent of £1,000, but I want a mortgage at £700, and they're not allowing me to do it because of a deposit. And it's like, well, that's now what they're listening to. They're listening to that, and they're saying, well, yes, absolutely, we see what you mean, and you are paying rent. You can acknowledge that you are paying rent, and you're managing your bills, you're managing your finances, and that's what lenders like Skipton are now listening to.
Is it only Skipton that does it?
At the moment,
yeah. And they've created this niche, and they've met, and there's like many committee meetings to get to this point where they see the risk, and they've done the stats. The way I see it is, if someone's paid rent, bearing in mind paying rent, there's no such thing as like kind of repossession. You know, if you don't pay the payment, like, you're not too fussed about paying rent as your last bill. Whereas a mortgage, you know, if you don't pay it, the bank is coming. With rent, you might think, all right, okay, I'll have a word with my landlord and I'll see if I can do this. And it's easier for someone to think, because of the consequences, like, look, I can't afford it this month. Whereas with a lender, you know that there's going to be consequences financially, because they won't treat you like a landlord and be sympathetic. They're going to be, no, you've missed a payment, that's on your credit report. So using the landlord payment history for the rental property, that gives a customer like their own sort of credit score and credibility, because 12 months rent without missing a beat and managing your bills, you're gonna be fine for a mortgage. I mean, obviously running your own home can be more expensive because you're allowed to knock down walls and paint and do whatever you want. But actually, it just shows you're sensible. And for all the criteria points, there's a few. So the maximum term is 35 years. The rent has to be, the rent that you're paying, the mortgage payment for the new mortgage can't exceed that rent.
Yeah.
Say that again.
I have to say it again, yeah. So
if you're paying 525 on rental, your
pick
mortgage
an easy number,
payment,
right? If we're paying 1,000,
paying thousands. Yeah, if you're paying £1,000
Yeah.
rent, your mortgage payment has to be £1,000 exactly or less.
less, okay.
Yeah. So it's like working backwards. On a normal
Yeah.
mortgage, we would look at affordability.
Yeah,
we would then look at purchase price, what deposit they've got available, which gives them the purchase price that they're going towards. But with 100% mortgage, we have to work backwards. We have to go, what is the monthly payment that they can do? And then we have to work out the purchase price.
So, right, okay.
So that's just one level of commitment. So just think of it as you've proven you can pay £1,000 a month, so we're going to let you get a mortgage.
Yeah.
But because we can't presume you can pay £1,100 a month, because all we can ever is that 1,000. That's the secret.
So it makes sense.
It's dead clever because when many people have rented property from family, and they've done it legitimately. They've rented property, tenancy agreement. They've paid all the bills, but because it's family, that 3-bed house might have been at a bit of a discount. Yeah,
that's what I was kind of going to say. What about, is there a way?
So there has to be some sort of cap in it. Now, if you're paying low rent and you're just very lucky, you're going to come across and say, like, I'm paying £500. I mean, we can't name the customer, but roughly, Charlotte, give us the...
about 500. So I think based on the interest rate that Skipton were offering, it was just over 97,000.
That they could purchase.
That they could purchase, based on a £500 rent.
So that's it. So in a way, if you're not fiddling, but if you're getting cheaper rate, it's going to see you. It's going to do.
If you're it's a bit like Cumbria, mate. It's the houses are so expensive compared to what the rent is. Whereas in the northeast, and I've always said this, the rent is high in the northeast, yet the house is affordable. So when it comes to doing a mortgage application for a buy to let, over here, it might be a 300 grand house, but yet you're only paying £1,000 a month rent. That's cheap in the northeast. That 300 grand house would probably cost you 1,500 quid rent.
Right. Okay.
So
why is that then? Is there a reason?
It's just, I suppose it's the demand. It'll also be the home ownership. It might be that people have a lot of property over here, which maybe is paid off, so they're not relying on a mortgage to boost. It might be competition because obviously we know what it's like over there compared to here. It's a lot more sparse. But you can rent over here quite nice houses in terms of the value for rent
decent
ratio.
Yeah. But then if you come to buy it, you can't.
When you come to buy it, it'll cap you. So I think here in Eden Valley, in Cumbria, I think if you're paying £500 rent and you think, for example, I want to buy this house that I'm living in, you're going to struggle at that, because the mortgage payment isn't relative. So that's where you need to speak to a professional to actually work that out. At the moment, it's a piece of cake because there's one lender, one interest rate. So we could almost build a scale which everyone could look at based on a term of 35 years, because if you the longer the term, obviously if the client's older.
But is it a maximum, did you say, of 35?
Maximum of 35. But if you imagine the scenario of 35 years, that's the cheapest way to get your payments down. So the mortgage payment needs to be lower than rent. So you could almost put on the left 1, 2, 3, 4, 5, 6, 7, £800, and on the right, a 35-year term, what the maximum mortgage would be.
Okay.
And because it's 100%, the maximum mortgage is the maximum purchase price.
So that leads me on then. Number one, why are they doing it? Why have they decided to do it? Because all the risks on them. Is there anything that's... Is it because they just want to get that little slice of the market that the people who couldn't get a mortgage before, they're thinking, there might be X percentage there that have got no deposit, would rather take their money and risk it not take their money and risk it, but would rather take their money, have them as a customer and hope they don't default on the payments.
I think it's always about, they're always hoping that they're never going to get repossessions, aren't they? I mean, the help with first time buyers is needed, really, because we need people to get onto the property ladder. And I mean, there's probably not had one of these, is it 2008? Plus 100% mortgage.
Oh, so I've had them before.
And this is where the negative comes from, because it would be great to have someone in here who wasn't excited about it and was nervous. Because as I'm nervous, because if it gets abused and it doesn't perform well, it won't happen again. This will be the only time they'll allow, because they're kind of going into it again, but they're doing it right.
Was it skipping it, or was it someone else did it last time?
If there was a few lenders that would delve in it, but like the most common one you would have heard of is Northern Rock back in the day.
And why did they stop them? Because of this?
What happened? It's a long story, podcast in itself, but it was a lot to do with the valuation of properties and the overinflation, which is what we're going through now. Yeah. So property prices are high. So imagine this, that you buy this house and you think, Paddy, you're the greatest mortgage advisor in the world, don't have a deposit, and I've managed to get my first home after renting for 10 years. I'm over the moon. Yeah. You then buy that property at 100 grand. But then the market goes downhill for a couple of years, and in 2 years' time, you realise that the house next door, which is identical, sells for 90. You've already got yourself in a problem where you're in negative equity. If you sold that house, you'd owe the bank. Yeah. So that's the risk, and it could happen, probably will in some instances, because not one house or area is the same. But in theory, the banks have protected it, and Charlotte pointed out yesterday, we had a good discussion. It was late last night, actually, wasn't it? So you worked out that the 5-year plan, because it's a 5-year fix, so you know your payments are going to be fixed for 5 years for no more than your rent. That's key. Can you afford that? Yes. Okay, brilliant.
At the minute, but there's a chance situation.
There's
always good.
There's always a chance of any
But you'd
mortgage.
also struggle with your rent, wouldn't you?
Yeah,
as well,
of course,
if that was the case.
Yeah.
I mean, not ideal, but let's give them a chance. You've got to gamble at some point.
Yeah, of course,
bearing in mind, there is 95% mortgages, Baz. So what the argument is what's the difference between 5%? Why is it not 4%? Why 5? Like where is it? So I feel if they've done this and
so there's never been a 4% or a 3-2.
3-2. Well, yeah, when there was 100%, you could do.
No, I mean like at the minute before this on Monday or whatever.
No, so you needed 5 minimum.
Yeah.
And that there's reasons behind it. There's not a chance in hell they would be allowed to do this if they would have to have consulted. They've got to be responsible. Yeah, so there's obviously data out there which actually says give them a chance and let's prove it wrong. But I think they've put in the right things. And what Charlotte pointed out last night was, I think you looked at, in fact, you fast forwarded, didn't you? In 5 years' time.
Yes, yeah.
They fell within a 95% product range.
Yeah, based on the purchase price
right,
that they
so
bought it at.
So explain that, right? So it's a 200 grand house.
Yeah.
And then, I don't know, right, with paying £1,000 a month, right? So then you're saying, why would they suddenly be able to afford a 95%?
It's not so much afford a 95% mortgage. No. What we're demonstrating is that in 5 years, that 200 grand mortgage is now 190, which was
okay, yeah.
Which just made it kind of like they'd fast forwarded and they'd got somewhere. But there was a podcast I listened to yesterday. It was done by Mortgage Strategy, and it was from Skipton, Bill and Sadie, and the data they had looked at was 10 years ago. That the I don't know if it was an average growth or just in a specific area, but if you bought a house 10 years ago, you'd have gained roughly £70,000 in value.
Yeah.
If you rented a house 10 years ago, you gained nothing, but the landlord did, and you paid everything. So what they're looking for is the long game. They're looking for you to be able to buy a house, get you on the ladder, and live happily ever after. And you'll think it's the best thing you've ever did because you actually got out of that rental trap.
Yeah. And the basic thing is they're getting something for the money, aren't they?
Yeah.
Eventually, after 30, 35 years, they should have that house there, and that's money they've been living somewhere, and they've got that as an asset in effect. Whereas when you're renting, you never get that.
Exactly, and because in the 10 years wages haven't gone up, the person who's trapped in that rental cycle didn't get the gain of equity that me and you got because we bought, but the wages haven't gone up, so they're even further behind.
Yeah.
So now this is the chance. There's just a huge amount of risk, and no one knows.
So you mentioned about rates, Charlotte.
Yeah.
What can you tell us what rate it is or not?
Yeah. We've skipped in at the moment. It's 5.49%.
How's that compared to a 95%?
Pretty competitive because rates are high.
It's not far off really the 95%.
You would have expected it to be horrific, but they've actually, I mean, this is just me talking here, but they've built it around what a stress test is used for a buy-to-let quite often.
Right.
So when a landlord is paying it, bear in mind for a landlord to buy a property, the assessment is completely different. But the 5.49, it just makes sense, but they're not robbing you.
That's what I was going to say. So you're not having to pay over the odds to get these.
No.
So they're not penalising you for not having a deposit in effect.
In
So
comparison,
they're not getting anything else out of it, then, are they?
So if you imagine that scale again, Baz, so you've got like 60%, 70%, 80%. Like, so obviously the bigger deposit you put down, the better rate you're going to get. Yeah. But the jump from 95 to 100, it's not as big as you might expect. I mean, you could still get a mortgage with a 20% deposit, depending on your circumstances. That could be higher than that 5.49 because of your criteria. So 5.49.
So that could be credit history and stuff, you mean? Or
whereas Skipton want absolutely squeaky clean, perfect, quite rightly.
Yeah, you've got to be no credit problems.
As we say though, it's you're only as squeaky clean as this minute now.
Yeah.
Anything could happen in the next second or two, so you just don't know, do you?
No, absolutely. But that's the same with taking a 95% mortgage.
Yeah, it is, of course it is. Yeah.
Still exactly the same. You know, you can get 95% mortgage and then be redundant in 2 months' time. You just don't know that risk.
So, right, so they're taking all the risk on themselves, right? So they've given me that for, is there a minimum term in effect? Like you've said maximum terms 35 years. What can you take it for, like a year, a couple of years, something like that? Is it, or is it 5 years?
Like a mortgage, you mean?
Yeah.
Or do you mean the term for the initial product part?
Yes.
No, so it's a 5-year fixed only. And
Always is.
Always, yeah.
So far, that's the only way you can do it. It's very sensible.
Right. So 2023 now. So I take it out, paying £1,000 a month.
Yeah.
200 grand property. Gets it 2028. You've obviously contacted me 6 months before because that's what you do.
You paid 60 grand in payments.
Yeah.
It should, basically, the general rule is that you should be below the 95% mark when you come round to remortgage.
So, remortgaging,
yeah,
you can't, obviously... So what you're saying is you've already paid off so much, so you don't need to be on a 200 grand mortgage anymore.
No.
You would be on a...
And hopefully your property's gone up in value. 5 years is a long time. If we said 2 years, you wouldn't be able to call it because we don't know if we're going to go into a little bit of a recession, that the property market's going to suffer. This will help because the key point is, and Charlotte mentioned it, the first time buyers need this help. So imagine you put your house on the market, yourself, okay? Let's say your property's worth 400 grand. The person who buys that is probably not going to be a first time buyer, yeah? But the person who's looking to buy it is probably trying to sell their house down to 200 grand. The person who's buying the 200 grand house is a first time buyer. There's not a lot of help for first time buyers. So the people who are looking for you and you're thinking, my house isn't getting any interest, it's because they haven't had interest.
So it's like, it is the chain in effect, isn't it? It's the bottom line. So with that then, I take it it's just a normal remortgage process after that?
At the 5 year point, yeah. And then Skipton have said, I haven't seen anything publicised, but they've said that obviously they have to offer an existing customer remortgage at that point. What I mean by remortgage, it's like a fixed rate because everyone is allowed stability. We're trying to avoid the mortgage prisoners because there's too many of them already. Whereas with Skipton, there's going to be a product. With Skipton, in this podcast, it's worth a listen if anyone wants to kind of follow up because Skipton are dead keen for competition to come in the market. Now that's odd for a bank to say. They want on Monday Nationwide or Barclays.
They want this to be normal. They want this to be
They want to have competition so that for one you're spreading the risk because they don't want every customer. No one does, and that's how bookies work and everything, isn't it? But they need to make sure that they're not just trapped with Skipton because if it is still 100%, so let's say that you bought that house, you paid 10 grand off it, it's now worth 190. Lo and behold, your mortgage is 190, so you're still at 100% 5 years later. That could happen. Okay.
Yeah, because this is what I don't really understand. I thought that was just on the first time you mortgage, but it's not. You're obviously, when you remortgage, it's a percentage of what your house is worth.
Yes.
Still, is that right?
Yeah.
So, my house has gone from 200 to 300 grand.
Yeah.
But, so that means I need less of a percentage.
Yeah, because you don't put a
house prices have dropped.
Effect, so
it's gone down to 100 grand.
So you've got more equity.
Yeah.
As long as you're below 95% and under, you can go to other lenders.
Other lenders, yeah, at the moment, and then
so you're not stuck. You're not becoming a mortgage prisoner with Skipton.
And you're not making put a deposit down then at all. That you paid your deposit off by paying.
Yeah.
And I wouldn't be surprised if in about a year's time, 2 years' time, we've got a lot of lenders in this arena. But also, it's the remortgage propositions will come. A bit like the government Help to Buy when that started. They didn't have products out for the remortgage because they didn't exist. But then there were people that came into money that maybe thought, actually, I can pay this off now or pay a percentage off. So at some point they'll build products at that range, and maybe because people are mortgage prisoners who have what's classed as negative equity, maybe because the way that the market is stability, and if people have been making their payments, there might be lenders open their doors to say, well, actually, we're going to adopt similar criteria, and we'll take on that risk at 95 and above for a remortgage. Who knows? But that won't need to be a problem until 5 years. But it doesn't mean that you, who have today just bought your house for 100 grand, and you put in 5 grand of your own deposit today without this 100% mortgage, that in 5 years' time you could be in that situation, even though you put 5 grand in, because that could have dropped to 95.
Yeah, it could have gone either way.
So you're going to need a remortgage, aren't you? So the problem already existed, like Charlotte said. Or the risk already existed.
How does it work? You hear a lot of people, and we've looked into thinking of doing it. So when I remortgage, I want to add an extension on my house.
Yeah.
So that's kind of like, is that more than 100%? You see what I mean? Are you're lending more than your house is worth to do something to it to make it better? Is that a real thing, or have I just made that? Do you know what I mean?
So
if you're wanting to lend money on top of what you're paying now, so
that kind of doesn't exist. If you're at 95, you could use money to put an extension on, or you could get a personal loan to do home improvements.
Right. So how do people lend more? Just because their house is worth more than what they're now paying?
They've probably gained that equity, or they've used a personal, like a home improvement loan with a bank, 5-year term, and they've done that. Once they put that conservative on, that might have given them a greater value. So the house might be worth now 120, and they've only spent 10 grand to get this conservative on. They can then remortgage at that point and put that into it. But that's it's very, very complicated, that side of it.
Yeah.
Normally, people who are doing home improvements, when they're doing home improvements, they've lived in the property a little while.
Right, okay.
If they want to buy it and they want to do things straight away, they would have worked it out. So what I mean by that is, you would come to me for an appointment and say, I've got 50 grand in my bank, I want to buy that house that's worth 200 grand, and I want to move in and I want to turn that garage into another bedroom. How much is that going to cost? 10 grand. You put 50 grand in, your mortgage is 150, but you've got no money left. How's that going to help you? So what would you do? You'd put in 40 grand and you'd have a mortgage of 160.
So how does that work with this? So I'm going for 100% mortgage. I've got no deposit to put down. I'm going for 100% mortgage. I'm fine in the past paying £1,000 a month.
Yeah.
But I need stuff happening.
Well, everyone needs to do stuff, don't they? When you buy a house, you need to do things.
But surely that means that you're going to struggle then, because you've never had to do that before because the landlord's done it. So is that not another risk factor that needs to be taken into account? Do they look at the type of property, or is it only on new builds? Is there anything?
I think because there's me kicking the drum again. It's a good question, Baz, because lenders, sometimes it is all you've got is £5,000 for the deposit, and there's not a lot of scrutiny on how are you going to carpet the place, how are you going to do this, but do you know what people just do?
But does that not put financial pressure on them that's going to stop them paying the repayments? Or
it's a different type. Like buying a season ticket, 600 quid or whatever.
So you've got to pay for your pies and your pints at the match.
When you're buying a house, you just don't have a holiday. You want it. You're excited to buy a carpet. As a tenant, you don't buy a carpet, or you certainly don't buy a top quality one. So actually, this is money you've probably saved up. So they may have £2,000 deposit,
but just don't want to use it because they need it
as the deposit. So that might and bear in mind, these people that are going to want to do this have probably been trying for years to get on the ladder.
Yeah.
But imagine not being able to because you're paying rent.
I'm just looking sort of worst case scenario from Paddy and Baz. I want my money. I want my money back, and I just want to make I would be thinking along with me. I'm not letting old people get it. Like, you know what I mean? Obviously joking there, but you want to make sure you get your money back. So the last thing you want is them having to spend 10 grand on a kitchen, 5 grand on a new bathroom, get a garden landscaped and stuff like that. So how do they have anything? Excuse me. Do they have anything? As in, like, property, checking the property before? There's not a certain stipulation of property type, or
no.
Obviously
they'll value it to make sure it's at value.
It's got to have a working kitchen. The criteria.
It's got to be habitable.
So if it has signs of damp, which is going to cost you £2,500 to fix and things like that, they would pick that up before.
And that would go on to the cost of the house, in effect.
I think with 100% mortgages, they probably would at that point decline the property.
They'd probably decline it or put retention on. So retention means that they'll lend you everything but $2,500 because they know there's $2,500 worth of work.
Oh, right, okay.
Retention is really complicated. It's quite actually straightforward.
Is that kind of saying the house isn't worth $200,000? It's worth 190.
It's saying it's worth $200,000, but you're going to need to spend $2,500 on it before it's worth $200,000. Now you would go back if that happens, and it will. So they go back to the estate agent and say they've said that the boiler needs doing. Yeah. Then you go back to the person selling the property and have a negotiation and say, look, will you reduce the price?
All right, okay.
But also the lender's going to want that. Now there's the problem because the lender is saying we'll give you this property on the mortgage, but £2,500 less. So you either have to go and find it or have it to be able to pay it.
Right.
People will. It's a great question, but that's the same attention.
Yeah, no, I'm sure. I'm just wondering about that.
But lenders are very good that you need a property that you can move into. Obviously, it doesn't need carpets and it might need paint, but you can afford those, and that's what you save up for. When you're in, you buy things as you go.
Yeah, reasonable. Like
also family help. The reason my argument yesterday was against a side of the marketplace which is saying it's too risky. It's not fair that people aren't committing. They're not putting in their own money to buy it, and therefore they won't, and this is quote for quote, that because they're not putting in their own money, they won't feel as responsible.
Yeah, of course.
For the ownership. But parents and grandparents have constantly, probably nearly in half of the purchases we do, gifted or loaned deposits. So like that's mum saying here's $20,000 to go and buy that house. So
what's some of them full deposit.
And they can have that without, and they could be still living in the spare bedroom.
Yeah.
And they've never paid a bill in their life. So to me that is a huge risk.
Yeah.
Because they've not put their own hard-earned savings into the mix.
And sometimes it generally is parents trying to get the kids out of the house, isn't it? You know,
it's like you buy a house, your mum and dad might buy you a washing machine, they might carpet the place.
Oh yeah, definitely. Yeah. I just think, not thinking of it from...
You can buy new builds with this scheme, by the way.
Right.
Yeah.
There is a lot on, I don't know if you looked on, you've got to take it with a pinch of salt on social media anyway, but a lot of people saying, like what you've just said, but how is this fair for people that have saved up for a deposit and got on the property ladder? Like, how is this fair, and how is it sort of thing? And I do understand where they're coming from.
Yeah, I do get, but then like there's schemes as well, isn't there? Like the ones where you put X amount in and the government gives you 25% and stuff. So these people that are now using the 100% mortgages, they're having to pay rent. All their money's gone on the rent stuff. They maybe can't afford to do that.
Yeah,
there'll be a lot of them.
Swings and roundabouts.
There'll be a lot of them that have got like halfway into that Help to Buy ISA. And they've worked it out on paper that they can buy a property in 18 months' time. They'll be coming to us now because they're in rented for 12 months.
Yeah.
And they'll actually have some deposit. And if they want to, they'll put that in. Because they need to, the stipulation with the Help to Buy is they have to use that for a purchase. So they can't just pull that money out with the profit of the bonus of the £50 for every £200 they put in. They can't use that for home improvements. They've got to use it for the purchase. So they will probably still put that in because they're getting the bonus. So it might be a 98% mortgage. Right. But at least they can use all the other savings and help from family to...
So now there's 100%, you can get anything below 100%.
Yeah.
Basically.
Yes.
So like with that as well, I just think, if it was me...
We've skipped in subject to criteria and credit score, which is going to be a heartbreaker for us because Charlotte got excited last night, and for all we know, we collect all the documents, we do the bits and bobs, we get an agreement in principle, and it says no. And there is no alternative. Yeah. There's not another lender to try, and it is just system.
You then have to say you have to wait till you've got X amount.
Well, until Skipton will say yes. And the criteria is tight enough that their credit score should be good.
Yeah.
But there's reasons why it might not be. So you might not be on the voters roll. That'll probably get you a decline at 100% if you're not on the voters roll, especially if you've been there 12 months. Yeah. But there'll be people who's rented for 5 years, but last week moved. And they're going to be at a disadvantage because they haven't moved all the bills over. Right. They've got 12 months, so that's fine. It doesn't have to be in the same
right.
But it does have to be at that rental price. So they can't, because I said this yesterday, I went, can you just move to a $2,000 a month rental for
that's
a month?
12 months.
12 months.
Right, okay.
Because that's a good loophole, isn't it?
Yeah, it is.
Can I rent you for
I'm thinking of all these things as a lender. So this is the thing, I'm thinking like, if it was me, if you forget about the 100% mortgages for a second, if you came to me and you're going to lend 200 grand I see you've got 100 grand in your bank account, I'll surely be thinking, well, why don't you put half that down and we'll go 50-50 then, so the risks...
So if I came back to you as an advisor and said, Baz, if you put just 20 grand in, I can get you a rate of 4 point something, and the payments are a lot cheaper, you'd have that all day, wouldn't you?
Yeah.
So that there you
could have a less term or anything like that.
But there will be people that won't. I mean, not everyone wants to put all the money in the property because they don't know when they buy it. I always say you buy it and then 5 seconds later the boiler breaks.
Yeah, you're right. Yeah, I'm like that. I'd keep some for a rainy day.
Would you really?
Yeah.
I don't think you would. I don't think you'd tell anybody you had the money. You'd hide it.
Well, this is judging everyone on your.
I'm just
straight up and open. I don't break the law. I just want to put that out there.
I've known you for 3 years maybe. You've never bought us a pint.
I'm always buying bloody pints.
Even when we went
on holiday,
didn't buy us a pint. We just went scuba diving and didn't even pay the bill. He just went scuba diving.
Absolutely ridiculous. Everyone that knows me knows I'm reputable, and so is becreative.co.uk. I just want to get that in there
every time. So the myth that we're busting today is you need a deposit to get a mortgage.
So I just want to know who's losing out on this. So is any other lenders going to get...
Lenders are taking the risk finally.
Yeah.
But are any other lenders going to get pissed off that people now aren't going to be taking... They're not going to be saving up and getting a 5% mortgage off them?
Good point, I
think it depends on the figures, doesn't it? It depends on who's going to go for this mortgage to begin with. Like, say, there might be a lot of people that are very sceptical about it and actually it's not going to be very popular and they might pull it. We don't know that yet until people actually start taking it. So
do you think
that's going to be something we can assess in a couple of months,
Do you think other lenders will get on board?
Yes.
Yes. I'm thinking a couple more mainstream.
I don't think Skipton would have done it if they already hadn't had the gut feeling that this was going to happen.
Yeah.
I mean, they will be the scapegoat because obviously if it doesn't work, they tried it and they had the knock-on effect. But you're right, because Nationwide might have had a 5% deposit product that was already agreed with this customer, but then this product comes along and they think, this house we're buying, we could do with that $5,000 to do that kitchen. They can then reapply for the Skipton one if they meet the criteria, and then the Nationwide have lost that business. So there will be an element.
So is there nothing that the government could have done before this to cover that extra 5%, if you see what I mean? So we just kind of...
They did. They had the government help to buy scheme, but that was just for new builds.
Yeah.
There has been previously...
was that? And that was just where they give you the extra bit you need?
Well, they are doing loads, to be honest. They've got the ISA, I mean, it's a fast-forward saving scheme. The problem is everyone's needed to dip into savings at the moment. So that's what they're finding is that people are pulling out these ISAs.
Right.
That hard-earned money saved. And... the government have done things, but we shouldn't be waiting for the government to bail us out. We've got a general election coming up, mate, so we could... One lender could say... one party could say, if you vote for us, we'll give you 100% mortgage guarantee, because there was one of them once.
Right.
And then you've also got another one that might say this, but so you'll get excited about it, but actually when they get into power, they might not make it happen. So it's great that the lenders, but this is just solid evidence that the lenders are in a good position, because they've got bags of money to lend. They're keen. They've tightened up everything. The consumer duties helped them. What we went through in 2008 has helped them, and they're lending money sensibly.
So when we're saying that the country's in a bad state and energy prices are going up and all that kind of stuff, everyone's struggling. How come they've got loads of money to be able to do this?
Because the banks, and that's how they work, So they invest. They buy the money from the Bank of England when it's low, and they obviously buy these bonds and things. So the banks are in a position where they need to make profit. That's what they do. But also they have to react with that. But customers are paying it in rent, so you're paying electricity. Why not own a home? And we need more home ownership. And the criteria, in my opinion, is bang right. I mean, as we say that, we haven't submitted this mortgage application. We could come against a brick wall, which we find is too hard to achieve or unfair, because they might say something has happened within that period that they're not happy with. I don't know.
Do they give you like a list then? Does it give you a full list of requirements?
Yeah.
And then, so as long as you think that you've succeeded in them, are they still able to kick you back? There could be something else that they've thought.
That's the same with any
on credit
application.
score.
Yeah.
I mean, we could get credit reports from everyone, just to make sure. But even then, it's up to the lender to have their own scoring system.
It's good to mention as well that it's still subject to affordability. So even if, say they want £500, you can purchase a property at 97,000. You still got to have the income to actually the affordability's still got to fit with their affordability calculator.
Yeah. Right.
So even though you've been paying £500 for the last however many months,
they're still going to look at you.
You still have to pass the affordability with them.
Right.
So if you don't, if for whatever reason you're able to pay it and you're only on say 10 grand annual income, that's not going to pass with affordability calculator.
You might be able to afford your rent because you're just very good at budgeting and paying bills.
Yes,
but they want to make sure you get
evidence.
More.
Yeah.
Okay.
It'll be interesting to see how it unfolds, and I don't think it's it's not going to be short lived. I think it's going to be something that they will have. The problem is, Skipton have opened the doors to this, and very quickly they're going to be busy with it, and at some point they will have to cut that off because they do that with products anyway. They have to price the products higher to stop the post land on the desk, because when the lender is the most popular with the best rate, they get all the business. So then,
so they can't cope with all the business.
So they put the rate up.
So they pull them
if
for a little bit.
Every tenant, and there's a lot of them that have paid their payments for 12 months and want to buy a property, for one, they're going to flood us. We're already filling up with appointments, but lender eventually is going to say, we've overexposed ourselves here. We need to calm it down, and that's why we need other lenders and competition coming into the market.
And if that doesn't happen, the product will just get pulled, basically.
You know me, Baz, I'm positive.
No, but that is what would happen technically.
But I hope
technically,
they can't just release 100% product without consulting the authorities and things like that. So I'm hoping that it's because there's a few in the pipeline that are also trying to get approval to do the 100%, because otherwise they would just be letting them. It's throwing
just go off on the road.
Slaughter,
You normally get it. It's like when they increase or decrease interest rates. You get one email from one lender, and then the next one's come in, don't they? And then you get about 5 or 6.
So do you actually get contact? Do they have like a mailing list? They send out to you exactly what's happening, products coming in, stuff. Are you like?
Oh, it's predictable.
Yeah.
Right. Okay.
Yeah.
They know. I mean, the base rate went up yesterday.
Yeah.
Again,
So expecting some increases.
And Charlotte had already commented, and she would put out when we send out the rates on socials, and we do a list of rates. It's Charlotte that does that, isn't it?
It is indeed.
So
there's no spelling mistakes in them, which is very rare for one of
It's copied and pasted. It's one of the most successful posts we do.
Yeah.
And it gets shared and passed about because it's useful. And honestly, when you look at them rates, it sets expectations because customers panic off it and go, "What is that? What rates are?" They're looking at the rate and they're noticing what they had previously. But if we don't do that, everyone's going to get a shock when they speak to us, because things have changed.
I must admit, I was surprised there at how reasonable that rate is for the 100%, because I thought it would be like double or something.
It's where I wanted it to be.
Really?
I was expecting around 5%.
Really? See, I thought I know nothing about this. I just thought it would be a massive hike. So if you're going into it, they're going to make shitloads back off you.
Yeah. They can't really do that. They've got to go with the statistics.
It's not a fluke that in 5 years they're at 95%.
Yeah.
They've worked that out, because
they've worked out.
That is with a steady market, no increase in property price in 5 years. That's worrying. Don't think that would happen.
Right.
But it could. And also those mortgage payments being made. That ticks that box. But at some point, someone's put that measure in place.
Yeah.
Absolutely. So I don't expect them. I expect lenders to come in. What we don't want to see is a 3.99 come in, which means that person who is paying £1,000 a month can afford a bigger property. Because the lower the rate, the lower the mortgage payment, and we don't want them to be lowering that yet, because I think this is a perfect way to introduce this.
Why is that?
Because if it's a low rate, and say today 5.49 did we say?
Yeah.
Gets you 100 grand. Yeah, and you were paying, and it's £1,000 a month, and you were paying £1,000 a month. If Nationwide come in and say we'll do the rate for 5, then technically you'll be able to borrow 105 grand.
Yeah.
But your mortgage payment will still be less than the £1,000. So what we don't want is people being over generous to the point where they're kind of competing for we will lend them more.
Yeah.
You don't want that. What you want is almost every lender to have the same.
So why would you not want that? Is there a reason for you personally
bigger
as a company?
Bigger houses has bigger bills, bigger council tax.
So there's more. So they're going to have more expenditure.
Bills,
it looks like they can afford the house, but they can't afford the running of it in effect.
Yeah, I think that's a good rate. So if they all come in at 5.49, that'd be ideal.
Yeah.
And the good thing is at the moment there's no product fees, so that's not another £1,000 that they're having to pay. There's no valuation fee, is there?
Nope, no valuation fee. No, there wasn't any cash back. So pretty much the same as a normal normal mortgage product. So like you said, they're not being detrimented for taking this mortgage. So it is good.
Is there any age? I know I'm harping back to it, but is there anything like where there's only a certain age group can get it or not? So you know that
just a term of 35.
Just a term of 35.
Up to age 70. So
is that what it is, up to age 70?
Well, for employed, yeah. So they'll be able to take it to, unless they've got like proof of pension income and things like that. But to be honest, 35 is more to stretch the term and make the payments affordable for the initial part to get them.
So if you're over 35 years, you would have a less term because you can only go to age 70.
So if I was paying $2,000 rent at the minute, I would be able to get the same amount but on a short term, obviously.
Yeah. But
so if I'm paying a lot of rent now,
yeah,
I'd be able to pay more per month, which means it'd bring the rate.
We wouldn't automatically default if they're paying £1,000 a month now, but we can get them that product for £800 a month for the house that they wanted, then we'll look at reducing the term up to where they were, just to show them that they can pay the mortgage off quicker.
Yeah.
But they might actually think, you know what, that house is a bit bigger, council tax is going to be a bit higher.
Yeah.
I've got to have. I need
better to have that money in the bank to see how it goes for the first 5 years.
Property, you probably want to think more about your insurances like income protection, life insurance, critical illness, because you own the property and you've got a liability now. So to me, it probably will be more expensive.
Right.
So they need to be accounting for that, and that's where we've been safe.
Yeah, good.
We could talk about this forever.
Yeah.
I think it'd be great to revisit this one.
I was going to say, could you
like 6 months' time? And
to see how many
just to see how it's going.
I think so. I think it's going to take a couple of months for us to really get.
Is it going to create any more work
happen
for you? Do you think, or is it just going to be the same?
Well, at the moment, it's doing well.
I think we're going to be busy.
No, sorry, I mean like as in physical work for you, processing it. Will it be
at the moment, the research is technically more simple because we've only got one lender to go to.
So that side of it, the biggest part we want to play is like we care about every single customer.
Yeah.
And when we speak to them in 5 years' time, we want to know that they're doing well, they're being able to afford it. There will just be an element with Charlotte where she'll really care about that particular customer because as an advisor, we've got responsibility. We're making sure they can afford it and it's the right thing for them. And it would be horrible to see, and it's impossible to tell because we've talked about ill health, losing a job. We want to see that customer in 5 years' time, it comes off and it works.
I know.
You know, but we'll have that many of them. That yes, there'll be a big pot. And if you put 100 customers in a pot, some of them will struggle, whether they're the millionaire or not. You know, so we can't be blamed for it. But we will probably ask ourselves a little bit, and we do it all the time, don't we? Yes. We ask ourselves, would you lend that money? That's how we
on a person to person.
On a yeah. Would can this person afford it? Are we doing the right thing? Because it goes against us, and like you don't want to be doing this, especially first time buyers, young'uns. And actually the biggest risk is now we've got to start thinking about is those 95% that don't rent, don't pay bills, and living at mum's, and then getting that gift of 5%.
Yeah.
They're worse risk than the 100%ers who've actually gone out there and done it.
Yeah.
How does this is a question I probably don't know the answer to. If you're renting on your own,
if
you're renting on your own,
and
there's two of you.
Oh yeah.
I don't think you can. I think you both have to rent.
It's not like you come. So say you both rented £1,000 each.
Yeah.
Is that going to be assessed at the time? We don't know the answer.
No, I don't know the answer to that. I do think you have to be both in rented accommodation. One can't be rented and then you go off and still live at home.
Unless it'll be
you would do it as just one of them gets the mortgage.
Just one of them gets the mortgage.
There'll be loads of questions like this coming up because that's a valid. I think if someone's paid £1,000 a month and another person's paid £1,000 a month and paid bills and meets this criteria, why not assess that as a budget?
I wish I thought of that question now.
Because then you've got one set of bills, not two sets of bills, and a higher mortgage payment of £2,000. Yeah, I don't know the answer to that. I'll have to figure that one out.
Cool. We'll end the subject there because, like I say, we can go on forever.
I know.
Busting the myth, you can now get a mortgage without a deposit.
I need to think of some questions now for you. What I have to do, the old basic ones. What's the best part of working for Patrick James Solutions?
Oh, these towards me now.
This is the
I can answer this one if you want.
So write down Paddy for that one, shall we? Yeah. What's the best thing about? What do you like about your job? What's the best thing about working here?
I love my job down to a T. I've been here just over a year now. I came in as a mortgage advisor, so previously I was a mortgage administrator. And
is that like a power planner?
Yeah, like a power planner. Yeah, I did all the paperwork and everything like that. But I love speaking to clients. I love doing the advice side of things. I love hearing about what they do, what their lives are like. I love it when mortgage is complete. I'm like, oh my God, this client completed, like super happy. And I am one of those people that get excited over 100% mortgages. So it's one of those situations where I absolutely love my job. So I'm really, really happy to be here.
And what's the worst part of your job?
Podcasts with Baz.
Podcast.
No. It's been a breeze, this one, hasn't it?
I can't even say it. I suppose, paperwork compliance wise with regulations. I mean, like Paddy says, they change all the time. So you really have to be on top of your game and keep a check.
Do you know what the worst part? I know what yours is. Is the same answer to the first question? Is that like she loves it when they're complete. So it's more about like worrying about them.
I know, yeah.
You take it home, don't you? You take it home and you've got that one case.
Especially if you take it on holiday with you.
Well,
you're there getting engaged and talking about 100% mortgages.
Charlotte was off on holiday. Where were you at previous to Florence?
Prague. Beginning of the year.
And must be nice to just... You're obviously paying her well, that's what she should have said.
But I remember texting you, and we can't name the client, but it was probably one of your hardest fought cases. And honestly, this client would not be in the property if it wasn't for Charlotte, and she grafted. And went above and beyond, like, to be honest.
When you say problem, the client was a problem or the situation?
The client was unfortunate because of things that had happened, and we could have easily said, "Go away and do this and come back." Instead, Charlotte did it all.
Lovely.
Yeah.
The client was absolutely lovely.
Right.
He was perfect.
By getting them, and then when the offer came through, I had to text her out of work, but like. That's the type of news you want.
Yeah, but it's a good text, right?
I bet you had a glass of wine or something.
Yeah,
because
so happy.
I have dreams about my customers' mortgage applications and my conversations with underwriters where I've got a problem case, and I know how it I've got a couple of cases live at the moment that I know I want to get across the line, and they will, but until they are, you don't know, and things can happen, and underwriters and lenders can change their minds, and I go through that in my dreams, and I can firefight the case at night and sometimes lose, and I wake up in a sweat and it didn't happen, and actually I come into work in 2 minutes and it's offered, and it is just like a relief. But because we're so busy, you've always got that success story then it's taken over by the other problem case that you're trying to firefight and win for the customer, because at the end of the day, like, it's all good, we can do these things, but there's many customers that we cannot help that we want to.
Yeah. No, it's good. You've got to have that passion, haven't you, really? If that's what shows in the reviews and stuff and repeat customers, isn't it?
I mean, it's never going to be our fault. Because we do.
Yeah, but you're the bearer of bad news, aren't you? It's not nice.
You can feel like, I mean, I lost a battle not long ago with a bank, I won't say the name, and I took it personally. But we moved to the left and we found a different, but at the time, you've got to let the customer know that we were unsuccessful, and they must be questioning, and I know I would. Did you try hard enough? Did you explain this? Did you tell them that we'll try our best? Did you tell them that we've got a little bit of savings? Did you tell them that I'm getting a pay? Did you? And we do. We literally put everything into our finance.
Such a pressure cooker, though, isn't it? When you're in that, no matter what else is happening in your life, if you're there buying the house, trying to get that house, it's all you're focused on, isn't it?
Yeah.
The last thing you want is that call.
And selfishly, like, we want to get paid. We're not a charity, so we want that mortgage to complete as well. And we will do everything we can. And when it doesn't happen, as straightforward as we'd like, that's where we get emotionally attached. And I think that's where that would be the word. It would be great if everything just went through.
Yeah, it would be. But do you not think it's satisfying when you do have to go through the struggle to get it, and then it actually happens, and you know you've gone above and beyond, and you've done your job, and you've done something that someone else maybe wouldn't have done. I think that's a good thing, isn't it?
You really remember those clients, don't you?
But if your first 10 cases were, "Hiya, can I have a mortgage?" and it was yes flying through. Your 11th appointment, you'd almost get their hopes up, because you'd like, it'd be easy this.
You're also starting to learn on your 11th appointment rather than your first one, aren't you? I suppose.
You learn with the difficult. This is why we have the meetings, and we go, like, we all put in our pinch and say, "I've got a difficult case." What did I ask you yesterday that I ask her every 5 seconds?
When Halifax do the PTs, when you're allowed to submit for a PT. I think I got that one today.
Is that you?
I knew the answer and I was like, she told me this yesterday.
So you now educating Paddy, now Paddy's stepped back into advising?
Every lender's different.
Charlotte and Chris will be busier than me, so I need to lean on them because they're in on it. Charlotte's done the skip in one, and when she submits the app and goes through, we'll be leaning on her when it comes to the next one. Was it easy enough on sourcing? That was it. Cool.
Very easy.
Final question. My house is coming up for remortgage soon. currently it was Chris Mandel that was dealing with it. Can I have you deal with it instead?
Yes,
Is that all right,
absolutely.
Paddy? She sounds like she's a lot more passionate than him. And he's dodging coming on the podcast. So I think we need to give him a right to reply. We'll get him in on one.
We will. We'll catch him after he wins his league.
Yeah.
League football.
He's
maybe a couple of days afterwards, so I might have a bit of a hangover.
Yeah, sounds about right. No, it's been good. That, thank you very much. It's opened my eyes on quite a bit. Because it terrifies me with the kids, like, how are they ever going to get, because I can't afford to just give them a massive chunk, how are they ever going to get on the ladder? And hopefully this is something that'll pave the way for...
We'll talk about that when we do your remortgage in 10 years' time.
Yeah.
Nice.
We'll release a bit of money for the kids to be able to buy their own home.
Lovely. We're also going to do a credit check at some point on me, aren't we? We haven't done that yet. I don't know if I'm kind of nervous or...
Do it at half time on Saturday.
Yeah, half time on Saturday while I'm either consoling myself or drink happy. Yeah. Cool. No, great. Thank you very much.
Thank you very much for having me.
We've no idea when the next one's going to be, as ever, and we don't know what the subject will be, but please just do us a favour and just give us some feedback. If you'd like us to shut up about certain things, or you're sick of hearing about this jingle that never exists, let us know. If there's subjects that you want us to myth bust, we can bust anything. It might just be that we need to just comment and say, well, actually, that's true, you can't. Because it's not that good of a marketplace that everyone can do what they do. Because, for example, last week there was no 100% mortgages. This myth was easy.
I take it you're going to be putting some stuff on there, FAQs and myth busting and stuff about the 100% mortgages.
We're going to have to tweak it all. And again, this is just the ever-moving marketplace. What we didn't want to do is start shouting about it straight away. Yeah. We had to learn how to get on podcasts, because it's all good saying to do it. But then you'll have 100 customers turn up and have to disappoint them. So.
Is it kind of announced and then live straight away then? Is it like they say...
Do you know what? I heard it on the radio in the car before I'd heard it in the mortgage press, or we'd received emails about it. So that's interesting, because it made the news. That's how
that's how I heard about it.
Yeah.
When was the last time?
You were in Italy, weren't you?
I was in Italy. I was having some lunch in Italy.
What holiday that's been. Are you paying her for that? So when was the last time, did you say? So about 2008?
2008 would have been last year. Before the
recession. It's a long time, isn't it? Yeah.
Yeah.
So it's 15 years or something. It's a long time, isn't it?
Yeah.
Well, let's see. Let's revisit this in 6 years. We can put them in 6 months.
6 months.
Because 6 months, they might not be in the house until then, so we don't even know the after effects. So we'll never be able to say, was it successful? What we'll be able to say is actually it's a really difficult process, and it needs the squeakiest of clients, and you can't do this, because we'll learn.
Yeah.
But it won't be until 5 years that we know that those 10 that we did help, whether or not they...
So at the minute you've got one inquiry about it?
Yes,
like one
We've got many booked in as appointments, but it was just last night that we had the first one.
So you've already got other inquiries about it?
I've got family, friends that have texted us just to ask us questions.
I feel like we're going to be getting bombarded whenever we're out and about now. Like,
can you see how
even outside of work?
Even though for someone who's not... like, it's not like they're just giving can I see that house, can I have it? Because that's kind of what was wrong back in the day. It was, can I see that house? Here's my income. I don't have to tell you what my income is. We didn't have to prove that we rented. Whereas they put these measures in place, they've done it right. And they've done it right for a reason.
Yeah, no, it's for someone like, I'm very risk averse, and if it was me lending the money, I can see why it would be a thing that you kind of have to do to catch the whole market, don't you? Because if not, you've got that whole percentage of people there that are
it's still skipped in the 2 years self-employed. Like income-wise, like you've still got to be employed. You can't just be kind of I'm not in employment and I've found a job. There's got to be.
They're never going to lend hundreds of thousands of pounds without having a bit of a guarantee, are they?
No.
Well, as much of a guarantee as you can have.
Yeah. So I think
that's the same with every mortgage.
Yeah. No, that's good. I didn't know. Yeah, there's loads of things I didn't know. I just assumed you could get anything up to, 100%. Really. I didn't know
Spot on. Cheers for that, Baz.
Brilliant. No, it's been great. Thank you very much.
Thank you.
Lovely. See you again
next time.
Yeah. Catch you later.
Bye.